Hello, everybody. Welcome to A Trader's Journey. My name is Leslie Pips, and welcome to the channel. So today I just want to do a quick video about some subjects that I feel like a lot of people are sort of on the fence about or confused about, and I just want to share my knowledge and my understanding, my research. I could be wrong. I'm not right. I could be right. I could be wrong. But I'm just gonna share with my 5 years of trading. I'm just gonna share my experience of what I think these subjects are. So it's supply and demand, order blocks, and support and resistance, and what I feel like what the differences are. So if without further ado, just have a look at the charts, and this I'm just gonna take you through what I think. I've already submitted some monetization today, so I'm just gonna take you through what I think these what they mean and what the differences are. So thank you for joining me. So I'm just gonna jump on to the chart. It's a gold chart, 4-hour chart. I'm not going to change time frames. I just want to explain to you what I feel, what is what. So check this out. So basically what I want to explain is what is a supply zone, what is a demand zone. Obviously, you know, supply zone is when we build up orders. In this case, this block over here, it's a build-up, basically a build-up of orders. It's a value area. It's where the most orders are sitting, because this price going up and down like this, creating this block, is basically orders building up in the market before a big move, right? You see it all the time. It's all price always consolidate before we move. Another example here, and another example here. So I just want to dive into this one because I feel like this will represent exactly what I'm talking about, right? So if we jump into this block over here, obviously you can see price consolidated for quite some time. It dipped below, and then there was a true move. So this becomes a demand zone, right? Consolidation, and a breakout, right? For me, this is what I consider a demand zone, and then this is what I consider a supply zone, right? Because consolidation and then a move, another consolidate and then move. These are value areas. This is where most orders are built up. That's why you'll see these candles up and down, up and down, up and down, and then the true move starts. So how do you recognize what is what? So within the supply zone or demand zone, there's things called order blocks. Well, order blocks are basically, I've called them footprints of the big banks, the hedge funds, when they show you that they're about to enter the market, right? They enter in a form of order blocks. So what order blocks are, it's basically chunks of orders that obviously the big banks can't come into the market and put in a big order going one direction, so they have to place their orders in chunks. So what they'll do is, if they want to go bullish in an area like this, right, before a big move, you'll see a sell to buy zone. In this case, you'll see a sell to buy zone. This is order block 1, chunks of order block 2, and then order block 3, and then it loses momentum. And then you'll see it often after these order blocks, there's a big move. Then they put in their true order, and then they'll push the market the other way, right? So that's what, for me, I feel order blocks are. It's just chunks of orders put in by the banks. So remember, these are banks and our hedge funds and all these big financial institutions. They mostly hedge, right? They don't trade like us retail traders. They hedge, right? What I mean is, when they're creating order blocks, they'll create these they'll sell to buy. So they'll put in a sell order here, and it big, put in a sell order. The reason is that they want to collect all the liquidity sitting in these zones, right? They'll put in an order. They want to collect liquidity here, collect liquidity here. Let me change colors of these things. Obviously liquidity here, liquidity here. Once they have enough orders in the market, then they'll put in their true order to go against, basically when they have enough liquidity, they'll just put in a big order to show their true move, right? So that's how they create order blocks. So what is the difference between the supply demand order blocks? And I'll touch on support and resistance just now. So what I think, let me just continue on order blocks a bit. The reason why I say these order blocks are quite important is when you look at their levels, right? Their levels always hold price. Reason why is the banks won't let the order go past. Let's say they put in an order, there's an order block here, right? The buy to sell. So this level here, this open price here will always be protected. The reason being is they've shown their true move that they want to push price down. They're not going to let price go past this area. Remember, they bought here, right, to sell, and they closed their buy position at this area. They're not going to let price, so that they're not, basically they closed the buy position here. That means on their hedge they're not covered, so they're not going to let price move up and move them into drawdown. So basically they bought here, and then when price moved down past this area, they closed their hedge and then they put in a big order. They're not, these areas are always protected, and I'll show you a few examples as well. So this area here will always be protected, these areas here, because of their banks. They're not in the hedge, they're not protected, they're not, the upside is not protected because they closed their buy order here. So they're in the sell, and then these areas, these open price levels will always be protected. I can show you a lot of examples. Here's another one here. You see these three order blocks here. Look at the open price, these three order blocks: sell, 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 and then buy, move. Look at the first order block. This price level is protected. They're not going to let price move down because of their downside is not protected. So they're not going to let price move down, and then they're in a buy order. They're not going to let it go down because of they've closed their protection here. So they're in a buy. So they're not in the hedge when it gets to that point. Another example here. You see order block 1, 2, and 3. Look at this high. It's protected. They're not going to let price move down. Why is it protected here? Because they put in sell orders here, and when they move price the other way, they started closing their sell orders. So they're not in the hedge anymore. So their downside is not protected. So they're not going to let price move down. Then there's countless examples of this. On the charts, I can find these examples. See another order block, but this is news candle, so it's quite tricky to figure out. But if you look here at this opening price of this order block, downside always protected. Downside always protected. You know, these levels are always protected. You can look anywhere in the charts. You look at these order block levels, the downside is always protected. Exactly how I just mentioned. I just explained it to you guys of how they protect the orders. So that's the difference between for me, I think, supply and demand and order blocks. The thing is, order blocks can be part of supply and demand as well. It's more or less. So a lot of people, for me, the way I look at it is the way I just explained the order block levels and how to trade them, how to look out for when to enter the market. Exactly how I look at it. That's where I can differentiate it from supply and demand zone. Because with supply and demand, you can just put in an order where there is area consolidation like this, and just put in an order like this, cover this high, and then target whichever order you want to target. As soon as price breaks through this area, you just wait for it to come tap into this supply zone. Like breakthrough, put an order in the supply zone. With the order block, you can time your trade with the order block levels, you know. So that's how I can supply. It's the whole area. The order blocks for me is the order block levels. That's how you can differentiate for me. But more or less, they they'll be in the same sort of bracket, supply and demand order blocks. But for me, the way I just explained it to you, that's how you can tell the difference, because a supply area is just a zone. The order blocks, you can time it with the levels as well, and the opening price of when the order blocks, because the order blocks signal a start of, okay, now we're starting to move with order blocks. That's what they signal. They signal a point where, okay, now the banks are getting into the market, now we're starting to move. So in this area, you're not seeing like proper order blocks, but as soon as we see the order block starting and the next candles, for instance, after these order blocks, you start seeing engulfing candles. That's when you can see, oh, the banks are now we're starting to move. But while it's happening, you're not seeing like a lot of engulfing candles, and then the patterns are the same. The patterns are the same. 1, 2, 3 candle, 2 or 3 candle order blocks, and the next one becomes an engulfing candle. So the patterns are the same. So that's how I can differentiate between them. But now let's jump into support and resistance. So support and resistance, for me, it's much simpler than these two subjects, because the support and resistance is basically forming your trade after a breakout of a supply or demand zone, right? For instance, like here, after you can see the high and the low of this block, right? Price is caught in this cycle, right? And then a fake out over here, and then a true move down and true move up. So why is this a fake out? So the thing is, for me, there was never a retest of this level, which is quite alarming, right? As soon as we broke out, I can draw a line for you. This is the last low pre-break. There was never a retest, right? So it's a fake out. Here, immediately after this candle breaks out, you get a retest of the level. So that's how you can spot them in the market, but also you're gonna have to have high time frame bias in mind, because you can see that's a low. We came, broke structure here, created another consolidation low area. At this point, price is looking bullish, so you wait for anything that breaks above this area. But that's how you can spot them, like a breakout and then a retest. Another candle has to close above the zone. Sometimes you get them and then they retest, and then the next candle comes and closes inside the zone. It happens. You lose trades that way. That's the market. That's how it goes. But that's the difference. A supply area to test this, it's also the same, because support and resistance breaks out, retests the area again, but the high of the area, and then moves out. Same thing with support, with supply and demand. Price breaks structure, and then it comes back, retests the area again. But the thing is, with supply and demand, right? Usually with I'll just go on the lower time frame. I just want to prove something to you. Usually with supply and demand, right, you get a breakout, price will move for a bit, and then come back into the supply zone. Whereas with support and resistance, it's a break, retest immediately, and then move. Supply and demand will push, break structure, right? See here, structure break, and then pull back to the original consolidation, which is the supply area. Happens all the time. Let me find you more examples, right? Another example, yeah. This is the supply area. We broke out for a long time, came back, tapped on it again, and we started to move, right? With support and resistance, we break out here. That's how you can enter the market. Break out here, retest, enter, you go. With supply and demand, you have to wait for it to come mitigate the zone and then move. So that's the difference. Support and resistance is a bit more aggressive, No, I mean supply. Yeah, support and resistance a bit more aggressive. Supply and demand takes a bit of patience, break of structure, wait for price to come back to mitigate this area, and then we move. Hopefully, I managed to explain that to you guys. Please put on the comments if it's anything that's unclear. If you want me to explain things a bit more in detail, let me know. Anything that's unclear. But that is my understanding of how I think you can tell the difference. But for most of the time, depending on what your strategy is, whether you trade SMC, ICT, most of the time it's more or less the same thing. You know, if you more SMC based, you just look at the zone and trade according to the zone. If you're mostly ICT, you wait for the order block, the order block levels. The most important thing is the opening price of the first order block. So have a look at that, do your own annotations, look at my video, do your own research. But for me, I just thought I should shed a light into something I've been thinking about for some time, so let me know what you think. Write in the comments if you want me to explain things a bit more further in detail. I'm more than happy to do so. Thank you guys for joining me.